The velocity of money is a topic that all real estate investors should be talking about because it's so prevalent in real estate, right? As real estate investors, you can make larger sums of money compared to potentially other business ventures. If you own rental properties, if you buy fix and flips, if you're a private lender, think about it like this. If you double, let's say you double your business, does that seem like that's something big? Or you double your net worth? Does that seem like it's a big number? Maybe, right? So let's say I double, a $10,000 investment. I have $20,000. Don't get me wrong, $20,000 is a lot of money. But guess what? It's the same amount of work in essence to double $1 million. And now I have $2 million. The reason that extremely wealthy people and high net worth individuals make a lot of money is because they're doing the exact same amount of work, but they're doubling bigger numbers. They're playing in a bigger space. It's an unfair advantage, right? If I'm here and Ian's here, and in essence, we're doing the same things, he's growing substantially more than me. Go look at Warren Buffett's. Go pull up a screenshot of Warren Buffett's net worth, right? It was like beyond a hockey stick, right? It started slow, and then he doubled and he doubled and he doubled and he doubled and he doubled. And we're using the term velocity of capital, but it's really velocity of anything in life. Knowledge, skill sets, relationships, right? It just gets bigger and bigger and bigger, related to a snowball. There's just more momentum. You push that thing down a hill, right? And you got this little snowball at the beginning, and then it turns into something gigantic that you can't stop. One of the reasons I got into real estate investing was I heard a speaker talk about this 20 years ago, where he was like, he owns a lot of rental properties, and he's like, I can't stop these checks from coming in, right? And he pulled out a bunch of checks. Yeah, he was a guru. Yeah, it was a little, tactic, but I fell in love with it. I can't stop these checks from coming in, even if I wanted to. And that's the way I look at it when I think of the term velocity of capital.
Yeah, and the velocity of capital, at first you're like, why would I do all this work and then have to sell? Right? And then for us early on, and I want to tell you guys just my real story, what we're living today. We're recording this in 2023. For the past 10 years since we've been involved in real estate, we have literally bought and owned everything that we've set out to be a rental, and we've bought and sold everything that we set out to be a flip. And we always thought, just like Jason was talking about, like, love having these checks just coming in, this quote unquote mailbox money. But what you don't realize after a certain period of time is that you get, say, a $300 dividend from a $300 a month dividend, $3,600 a year from one single family house. And we've owned these single family houses for several years. But what if I could sell that same house and get a $40,000 check one time? That's 10 years of cash flow in one shot. The question is, what could you do with $40,000? Can you turn that into a $160,000 asset? Can you turn that into $1.6 million? What can you do with that $40,000 to get you to the next level? A lot of the time, we got stuck in this legacy type model, and we're working through it in real time. And that's what we're here to do, is share you our real experiences. We're working through it in real time, saying, okay, we have these assets. They're the bottom 20%. Yes, we want them as legacy, but in the same sense, if we could free up capital and be able to deploy this amount of capital, we know with our current skill set, and when Jason was talking about velocity of not just money, but velocity of employees, velocity of skill sets, velocity of everything, we know when we put the capital in our machine, the velocity that we've created will make that bigger and bigger and bigger. So don't get hung up. And I did it for a very long time. Dan and I have done it for a very long time. This identity around, we're legacy owners. We're never going to sell. It's going to be cool to pass on to our kids. You cannot shy away from the fact that capitalizing 10 years of cash flow or whatever your number is, and being able to redeploy that into your investment vehicle to make that grow exponentially bigger is a very, very powerful tool that you should be looking at.
Yeah, and if you can see my screen real quick, if you're actually watching this on YouTube, here's net worth of Warren Buffett. And I know you hear Warren Buffett, well, he never sells anything, so he doesn't want the tax liability. He just wants, in essence, to own forever, right? But at some point, it might make sense to consider selling it. Like Ian said, I'll give you an example. We had, 24 rental properties, and we believed that at the time that they had reached max, that they reached capacity. And when we looked at the amount of money that we were going to make, it was, decades, over 10 years worth of income in one hit, right? And what do I mean by that? So let's say we're getting $1,000 a month on a piece of real estate. Let's say you're making $1,000 a month a piece of real estate gross. Let's say it's free and clear, and you're netting 500 grand, right? You don't have a mortgage, but whatever. Let's just $500. Sorry. So let's just say you make $200 per rental property per month, right? And you own a bunch of them. Okay, so that's $2,400 a year if everything goes perfectly, right? Like if you can make 25,000, 35,000, 40, 50, $60,000 on that, does it up one time, like 10 years, 20 years of income? Does it make sense to sell or does it make sense to keep? And there is an argument for both. And I'm not going to state which one's potentially best, right? Because there is an argument. Well, if I have it leveraged and I have cheap debt, I'm buying down principal, plus I'm still getting the tax benefits. I get all that, right? This isn't about that. The point is we took our assets and we traded up to other assets. We didn't take that money and just spend it and live on it and say, hey, yeah, I'm good, and then live off principal. That's not it. We traded up to a better asset. We sold it and we invested in larger commercial assets. We invested in some of our private notes ourselves, and we were able to turn it into bigger and bigger and bigger and bigger things. One of the best investing advice that I ever heard from somebody years ago was you start with your trash assets and then you always upgrade your asset classes. You're always constantly upgrading your asset classes. And day one, you buy the investment or the asset that you can afford or that you can understand, right? It might be an inexpensive stock. It might be an inexpensive rental property. It might be an inexpensive, primary residence. And then over time, you're constantly upgrading your assets to something that's that you can afford. Because here's the thing, the velocity of Ian's story, let's say you have a single family rental property, whatever, let's say it's worth 150 grand. And then in a great market, it goes up to 200 grand. What's that cap ever going to be? Is it ever going to be worth $1 million? I don't know. Maybe. Let's just call it $1 million, and it won't be 10x. That, it'd probably take a long time to ever get to that. But let's say it has that capacity to. Well, guess what? Let's say now you own a 50-unit apartment building because you traded up for that 1031, used the cash, invested in that. That has the ability to skyrocket maybe 10x or significantly more. Ian and I were both listening to one of Alex Hermosi's podcasts. If you've never followed him, follow him. Even though he's not a full-time investor, he really is an investor and he's got a lot of experience. And, one of the key takeaways he talked about, he didn't use the term velocity of capital, but he kind of did. It was kind of the same presence. He's like, listen, a lot of these guys have these big businesses and they're kind of think that they've reached their max or they're kind of have headaches from them. If you have a $20 million business, it's a hell of a lot easier to go from 20 million to 25 million than it is to start from scratch again and go from 1 million to 5 million. That's the hardest part. The hardest part of an asset on a fresh asset is to get that thing up to, the next level. When you already have a well-oiled machine, just like a snowball, right? It just gets bigger and bigger and bigger and bigger and bigger. And that's in essence it. And I mean, we went on a little bit of a rant on this, but I think this is something that both of us are passionate about. And it's something that we think about every day, mostly because, we see a lot of real estate investors that are trying to chase shiny objects and go from one segment to the next when what they're doing, they've spent so much time on and they're good at, even if they don't love it, it's just easier to keep moving that snowball. The momentum, it's not even having to move it. The momentum just does it itself, right? Just like compound interest. It's the most beautiful tool in the world.
And I think too many times people get caught up, and we did it ourselves, is, hey, we're this type of investor. We'll just own these and we're willing to deal with these headaches. And Jason hit several good points. Number one, you should always be trading up to better asset classes. If you really want to be a true legacy owner, Do you want to own that asset class forever? Do you want to own the assets in that area forever? Do you want to have investors side by side with you owning these forever? Or do you want to continue to grow your own capital to the point where you need, you can buy something on your own and it truly is legacy for your family? Another thing that you need to look at is treating yourself like an investor. Your capital, your investor's capital, everybody's capital involved. You are an investor of that capital. Like your job, a lot of the times we get caught up, I'm a real estate investor. Okay, cool. What's the last word in that? Investor, right? And too many times we get caught up that we're just real estate and we just invest in real estate. Whereas we should really be looking at and saying, great, I've squeezed this one piece of single family property, making me $3,600 a year. But if I had 40 grand or 36 grand available to me today, I know that I could redeploy that into a better asset. Now I'm viewing myself as the investor. Being the investor is the top of the food chain. And a lot of these guys out there, and Jason was talking about Warren Buffett and his hockey stick growth and never selling, you got to understand is he went in, he fixed these businesses, he created the value, then utilized margin against his own stock to have more money to go do more deals and create that same velocity capital using leverage against his assets that he's increased in value. It's the same thing for us. Another way to look at velocity of capital, maybe it isn't selling. Maybe it's owning 10 free and clear houses and having a line of credit against it and using that capital to then deploy in hard money loans or new properties to refinance and paying it off. That's creating this velocity of capital that allows you to grow and grow and grow, pushing that snowball down the road. So these are just real life experiences that we're going through today that I want to share with you because I don't want someone else to get hung up because we got hung up in the identity of legacy. Nope, screw it. We'll own them forever. Not a big deal. There's mental wear. There's financial wear. There's operational wear across all the owning these things for a long period of time. Be cognizant of it. Be an investor and treat your capital the same as you would treat any other investor's capital.
No doubt. Well said. If you like this content type, we'd certainly appreciate a quick tap on the blue thumbs up button. That'd be appreciative. Share, like, any comments related to this topic, feel free. This is something that Ian and I are passionate about, and we have a little joke that if we're not talking about it kind of internally together, we talk about it internally together anyway, so we might as well just jump on camera and do this. So if you enjoyed it, we certainly appreciate it. The kindest thing you could ever do for us is share it with a friend in need, a real estate investor or another business person or somebody that's got some questions related to personal finance. Hopefully we can be of assistance, and we'll talk to everybody soon.